What's up, guys? Morgan here, and this is Trading Forex. So today I'm going to be explaining for you guys how to trade, how to scalp the stock market. So I'm going to basically be explaining to you guys exactly how I'm able to scalp the scalp market. So my analysis today is going to be coming off based off on the one. I'm going to use the 1 hour time frame, and as well I'm going to be using the 15 minutes time frame for this analysis. All right. So the strategy is called ICC, which is stands for indication, correction, and then continuation. So for those of you guys that haven't watched my video before, if you don't know what that means, then I suggest you just go through my YouTube, watch some videos there, and you're going to get you up to speed to understand exactly how the strategy works, right? So without much being said, I'm going to go right up the video, and I'm going to be working with the 15 minutes time frame, and as well I'm going to be working with the 1 hour time frame. So my case study here is going to be Nasdaq and as well US 30, and I'm going to be looking out for SPX2 to know if you can catch some opportunities on that as well. So without taking much time, let's get into the video. I'm going to use what has happened in the past, and then I'm also going to use current market condition on this breakdown, just so it just makes sense, so it doesn't seem like I'm just pitching out, finding the perfect, cherry picking the perfect setups. No. So I'm going to be using what happened in the past and also what is happening currently on the market. So here on Nasdaq, if you're in my group, we broke down this chart a lot. So we talked about how price, if you notice here, price is kind of failing to make new highs at this area. So price comes here, rejects this area, comes here, rejects this area, comes here, rejects this area, and forms a new low. So what does that tell you? That tells you that okay, that buyers are not so much in the market, but under these areas, you can expect sellers to come into the market more, because under these areas, like, because price just is just forming new lows and respecting highs. So that's basically what I'm trying to say. Price forming new lows and respecting highs basically means that there's no much buyers in the market and that there are sellers in the market, and you can expect price to keep pushing down and keep making new lows. So all you have to wait for is price to come to the previous high, right? Reject it again, and on its way down, you want to take that trade and push it all the way down. That's what they call a continuation, right? So here on the chart, we saw that price here was just rejecting this area, reject this area here, and marker. So we saw that price came, rejected this area, right? Here again, rejected area here again, and then eventually price happened to make a new low, right? And what does this new low? What's the story behind this new low? Is that price is telling us that hey, on above this area, buyers still have the power to push the price up, right? So above these areas, buyers still have the power to push the price up because there are still some buyers in the market above this area, right? But under these levels, under this area, under these levels, sellers are fully in control and they have the power to push price all the way down to this place, right? Because when you're trading, you want to be able to follow what the market has done before. You don't want to be the one more like predicting what the market is going to do. No, you want to be the one to follow what the market has done before. You want to follow past record, you want to follow history, because that's where you have an edge. So we seeing this, we see that okay, price has already moved to one that okay, hey, under this area, price can go this low. So all we are waiting for is for price to correct itself. Because what did I say? ICC, indication, correction, and then continuation. When price makes an indication for you, which here this breakout here is the indication of price telling you, hey, under this level I can go this low, right? So whenever price makes a new high, just have in mind that price is going to correct itself. Price never really moves in a straight line, right? Price moves up and it comes down. It always corrects itself. So bear in mind that price is going to correct itself at some point. So that's what we're waiting for. Wait for price to correct itself and this move here. After price corrected itself, price back under this area, we already know that okay, hey, under these levels, price can potentially go for this load, because before in the past, like I said, want to work with the history, want to work with what happened in the past, right? So in the past, price has told us, hey, under this area, I can go this low, right? So that's the same thing here. Once you see price under this area, you already know that price is going to be aiming for this low, because under this area there are no more buyers in the market and sellers are fully in control of the market. So you want to move with price, right? Sorry about that. So you want to move with price, you want to move the market with what the market has done before. So with that being said, here again, price makes a new low, right? I'm going to mark it out. Here again, price makes a new low. And what does this new low tell you? This new low tells you that hey, under this area, price can go up this low, right? And once you see price under this area again, you already know the story that price can go this low, right? So price corrects itself again after the correction, tries to break out here, couldn't break out, and here eventually does and went straight to TPs, right? So this is just me explaining the strategy briefly using what has happened in the past. So if you want to get more information on the strategy, you can also go through my YouTube videos and get more information on the strategy. So I'm going to be explaining the strategy now with what is currently happening in the market. So the Nasdaq right now is not really the best time frame to use as the it's not really the best pair to use for this analysis because there hasn't been an opportunity here yet. So I'm going to be using the US 30 for this analysis, right? So here on the US 30, I can also use gold. Gold is looking good too, but I'll be using the US 30 because we're talking about the stock market, which is Nasdaq, US 30, and SPS potentially. So here on Nasdaq, I'll be using from this area, right? No, I'll break it down all the way down. Starting from top, I'll break it all the way down, right? So here on Nasdaq, we see price break under this level, right? What does this tell us? Price makes a new high and then goes on to take out its own high, and that gives us a sign that hey, maybe the trend is trying to change here, right? So price forms a low, giving us an indication telling us hey, under this area I can come this low. And what that tells you is that when you see price under these levels during session, that's very important. You want to be trading the Nasdaq, you want to be trading the US 30 during New York session because you don't want to be trading the pair when it's out of session. And the reason why you don't want to be trading the pair when it's out of session is because you're working with volume. You want the volume to be in your favor and you want the past history of the market to also be in your favor. But when you're trading the market, but you do not have volume in your favor, then there's chances that price can take you out, right? Because there is no volume. So you want to be trading with volume when there's volume in the market, when there's a lot of traders in the market, and that's when you want to be in the market too, so you can catch moves quickly, right? So price under this area, you already know that okay, hey, this is an indication of price telling you under these levels, I can go this low. Price is telling you, hey, under these levels, I can go this low, right? And with that being said, all you have to just wait for now is for price to correct itself. And after the correction, you need to take the trade to continue the trend, riding the trend down, right? So here we get the correction in the market. So price tries to go further above, but couldn't do that. And then this is still NY session, and definitely seeing price under here struggling to make new highs. You definitely should be in the trade. Stop loss above previous highs, and then you target these moves. This is always your first target, right? Your first target is always the last low made by the market. That's always going to be your first target. When I say first target, it doesn't I don't really call it take profit because take profits puts that psychological thing in your brain saying, hey, this is the take profit. So that I'm saying that once price gets here, you must close the trade. No, what I'm saying by take profit, when I say target, I mean the target is a potential target. It might not come to pass, but this is where you're overall looking at the market to hit. Sometimes it may not come to hit that level for some reasons, and sometimes it may get to that level and it exceed further and further ahead. So you want to have an overall target when you're getting to a trade. You want to have an overall stop loss and then target. And then when price hits your stop loss, you want to be out of the trade. And when price hits your target, you want to kind of like take out partials. Maybe if you want to hold more trades, you can potentially hold more trades with stops to break even and just look to ride the trend to see what the market is going to give you. So it's always important to take partials because you're not the owner of the market. The market does not belong to you. You don't have any sort of you don't have any sort of properties in the market. So you want to take out your partials when you can. Always take out partials when you can. And then when you take partials, you want to move stops to break even. So what I do here is that I usually do at 1 to 1, I move stops to break even and I take out partials. And this kind of gives me the ability to be able to take something from the market, because just like someone explained, something just like a mentor explained, Bullseye explained, when someone comes to your door and knocks on your door and gives you $10, what do you do? Are you going to take the $10, or are you going to send the person away hoping that they come back with $20? What are you going to do? What you're going to do is that you're going to take the $10, right? And that is exactly the same thing in the market. When the market gives you money, what are you going to do? What you're going to do is you take out some money from the market has given you, and then you go risk free. Then now, um, aiming to catch your targets, or aiming to catch whatever high that the market is trying to create for you, right? So back on the charts, this is the first trade that in this particular scenario, this is the first trade. TPs under target under this area, and as you can see, price just slides through and just keeps rolling down, right? Making another low. And that's it. That's where I you put the same strategy in play again. Because under these levels, right? Like I explained before, under these levels, what does this low here tell us? This low here, this low, this low here tells us that hey, price is telling you, hey, under these levels, I can go this low. Under this level, sellers are fully in control of the market. I can go this low. So you want to keep riding with the trend. You want to keep trading with the market. And you want to be working with what the market has done before. You don't want to be the one predicting where the market is going to go. You want to just be following what the market has already done and printed out for you to follow. It's like a script. Just follow it, follow through the trend, and you make your money, right? So um price makes a new low, corrects itself, right? Price corrects itself, and here I would say I wouldn't have taken trade here, because this is not yet a full correction of price, because this can be called a retest, but I don't do retest. What I do is correction. I want the price to correct itself. I'm back under these levels. I want to take load. But the reason why I took this trade in this scenario is that you see that price came up here, tried to break above here, couldn't, comes back multiple times. Price rejected this particular zone, right? Which is telling you that okay, sellers are really fully in control of the market, and buyers can't just seem to push price any further above. And when buyers can't seem to push price any further above, what happens next? Sales comes to the market and pushes it down. So that is the reason why I took this trade here. I took a sell during session, because I have to wait for all this to happen. So during session the next day, I took the trade here during session. Stops, like I said, previous high and TP overall targets here. And this was another win, another big win. And this is exactly how you can be able to trade the stock markets, how you can be able to scalp the stock markets. And yet again, this same strategy plays out again under these levels. What does this tell you? Hey, price is telling you, hey, under these levels, I can go this low. Under these levels, I can go this low, right? Price is telling you, hey, under these levels, I can go this low. I can go as low as this level. So what you want to do is you want to wait for price to correct itself. ICC, indication, correction, and then continuation. So you want to wait for price to correct itself. And when price corrects itself, you want to be in the trade to take it back down to the low. But in this case, I didn't take this trade. God knows the reason why. I just didn't like all the fluctuations here, and I didn't take the trade. But I took this one because, like I say, price again makes a new low. It's just simple. Just follow the trend. Just basic. So price makes a new low here again, telling us, hey, under these levels, I can go this low. So me seeing this, seeing that we're in the downtrend overall, price is just making downtrend upon forming new lows upon new lows upon new lows and respecting highs. So all I'm looking to do is just to keep moving with the trend and not do anything else, just keep moving with the trend. So under here again, I know that I already know that okay, price has already told me that price has already given me the indication that under these levels I can go this low, right? So all I waited for was a correction, And once I got the correction into the market, that's when I got the correction and the pullback into the area. That's when I got into the trade. Stop loss here, and again, targets, first target always with previous low. Of course, like I say, of course, you can keep holding the market after you've closed out partials. You can keep holding the market after you put out partials. Me personally, 1 to 1, I take out partials and I move my stop loss to break even at 1 to 1. When I do this at 1 to 1, then I look to hold the trade to kind of see where the market is trying to head to know if I can be able to catch more potential profits in the market. Because every other thing, the moment I close my partials, every other thing that comes after that is just free money because I've already made my risk in the trade. So every other thing is just free money, and I'm just not trying to be greedy, but also giving my trade the chance to play out and giving myself the opportunity to be able to catch big moves. So I take out 1 to 1, I take out partials and move stops to break even. That is how I trade, right? So some people like to have a target or a target. Like some people like to have a 1 to 1, a 1 to 2, a 1 to 3, or a 1 to 4. Right? You can also target your 1 to 1s or 1 to 2s or 1 to 3 or 1 to 4, whatever the case may be. But I always advise to have targets the previous low that the market has already made for you, because you don't want to be predicting where the market is going to go next. So um back on it, price again comes under here, makes a new low. It's just basic things just happening. Basic things just happening. Price comes again under these levels and make a new low. And what does this low also tell us? Just like this one, price is telling you that under this level, it can go this low. And all you have to wait for is for price to correct itself, because once price is done with the correction, then you can expect price to make a continuation to the trend that it's going to, right? So all we waited for was price to correct itself. Hold on. So we waited for price to correct itself, and once price was done with the correction, took another sell trade. Just trades on trades, hitting TPs everywhere. Took another sell trade in the market. Stops was above here. I was targeting this area as my take profit, right? And as you can see, price hits that area beautifully. And again, at the current moment, what is price doing? Price is doing the same thing again. Price already gave you a low. Price already gave you a low, saying, "Hey, just this is just this, and this one is with current market conditions. This one is not like I'm cherry picking or anything. This is the current market conditions. This is currently where US 30 is. So you can go to the chart right now and check where the US 30 is currently. Today's date is April 19th, Friday, April 19th. So you could should go and check to see where price is. So right now, price makes a new low again. So what does this new indication here tell you? This tells you that price is telling you, hey, under these levels, I can go this low. Price is telling you, hey, above these levels, buyers have some power to push price up, right? But under these levels, there is fully sellers in the market, and sellers can definitely push price all the way down to this area, right? So now we see price back into this area. All we have to wait for is, first of all, wait for session to come. Option. So back into the video, as I was saying, this is current market condition. Under this area, price makes a new low, telling us that, hey, under these levels, I can make this low, right? So now price corrects itself. Like I said, whatever goes down must come up, and whatever comes up must come down. So price always corrects itself as long as the chart is concerned. So right now, price has definitely corrected itself, and all we're going to be waiting for is to see price back again under these levels. Sorry, to see price back again under these levels, and only when price is under these levels, that is when we can look to keep pushing price down to make new low. So I hope you guys understood everything, and in details, just to break everything down. The strategy is called ICC, which stands for indication, correction, and continuation. And what this stands for is just that price, when price makes a new low, that is called the indication, because price is always going to make an indication for you. Price has to make an indication for you. Price has to tell you where you want to go before you make a move, right? So we wait for the indication. So we do not trade the indication, we just wait for the indication for price to show us where it wants to go. And then after price has shown us where it wants to go, we wait for price to correct itself, right? Because price always corrects itself in the market. Whatever goes up must come down, whatever comes down must go up. So price always corrects itself in the market. So we wait for price to correct itself. Then after the correction of price, then we then look to we then look to take a trade on the continuation, right? That is where we look to take a trade on the continuation of price. When price is looking to continue its trend back down or its trend back up, whatever the case may be, that is when we look to take a trade to make profit off the market. We do not trade the indication, we don't trade the correction. What we trade is the continuation, and that is how the strategy works. Anyways, thanks guys for those that watched to the end of the video, and I look to see you guys on the next one. Good luck.